Is the Indian stock market in trouble? If you've been following the markets lately, you might have noticed a significant downturn, what some are calling the market bleeding. But why is this happening? Let's break it down in today's video. Stick with me till the end to understand the key factors driving the slump. The stock market is often influenced by a mix of global and domestic factors. So, let's go through what could be causing the recent market decline. First up, global recession fears. If the global economy slows down, investors may pull their money from emerging markets like India. This flight of capital can cause stocks to fall. And let's not forget the US Federal Reserve's interest rate hikes. When rates rise in the US, global investors often shift their money back to safer, higher-yielding assets in the US, which weakens the rupee and hurts the market. Also, rising geopolitical tensions, like the ongoing Russia-Ukraine war or conflicts in the Middle East, create instability. This makes investors wary and leads to capital outflows from emerging markets. Now, let's talk about domestic issues. High inflation means the cost of living increases, impacting consumer spending and corporate earnings. If inflation persists, the Reserve Bank of India may hike interest rates, making loans more expensive and slowing down economic growth. On top of that, India's economic slowdown is visible in weak industrial production and low demand. Slower economic growth translates to poor corporate earnings and lower stock prices. Corporate earnings are crucial. When companies miss expectations or struggle with rising costs, whether from raw materials, wages, or low demand, it can send stocks tumbling. For instance, sectors like banking, with bad loans, real estate, and IT, slower growth, hiring freezes, are facing challenges that ripple through the broader market. Foreign institutional investors, or FIIs, play a big role in Indian markets. When global risk appetite drops, FIIs often sell off their Indian holdings, causing the market to drop. Currency depreciation is another factor. A weaker Indian rupee makes imports more expensive, especially oil. Rising global oil prices can further push inflation, hurting corporate profitability and leading to a market dip. Domestic political instability or sudden policy changes can also create uncertainty. Investors tend to be cautious when there's a change in tax laws or unpredictable decisions from the government. Finally, market sentiment plays a massive role. After a long bull run, stocks can get overvalued, leading to a correction. Panic selling, especially when large investors pull out, can trigger further declines. So, why is the Indian stock market bleeding? It's a combination of global economic concerns, domestic inflation, corporate challenges, capital outflows, and a fragile investor sentiment. All these factors are leading to a correction. But remember, market dips also present opportunities for long-term investors. If you are an investor, keep a close eye on these factors and make sure your portfolio is balanced. Don't panic, and most importantly, do your research. If you enjoyed this video, don't forget to like, share, and subscribe for more insights into the Indian stock market. See you next time. Why is the Indian stock market bleeding? Let's break it down in 60 seconds. First, global recession fears and US Fed rate hikes are causing capital outflows from India. Geopolitical tensions add to the uncertainty. Then there's domestic inflation and the RBI's interest rate hikes slowing down the economy. Weak corporate earnings and issues in key sectors like banking and IT are also dragging the market down. Plus, when FIIs start pulling out their investments, it puts further pressure on the market. Rising oil prices and a weakening rupee add fuel to the fire. In short, it's a mix of global and domestic factors causing this market slump. Stay informed and make smart moves. For more updates, hit follow.